Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. May corn was able to find great support this week, coming in up against our 2x1 angle after having retested that previous same 1x1 angle a few weeks ago. Upon finding support here, the formation that we're starting to see materialize looks very much like a wave 4 pattern coming in after this market has made what appears to be a significant major top, which would be analogous to a wave 3 movement. And from there, we would anticipate perhaps a 3-wave consolidation, given that the market's now made a higher low and that it's sitting right on top of very good support. The possibility is once again in play for the market to make a marginal new high that goes up to touch something in the neighborhood of $4. Next week, we're looking at first notice dates, so the possibility of this contract finding very great strength in the near term starts to decrease some, but we could very well see continued strength and follow through in the deferred contracts. Here we can see where very good support came in at our Fibonacci 61.8 number at 378. The market did give us one close below that number, but it was short-stayed and the market was able to close back above that number shortly thereafterward. We also have a very nice natural angle where the market has been able to recover, and we have key resistance still over at the 180-degree mark at 392.25. If this market's able to close above the 390 number this week, we believe that the potential for reaching $4 becomes in play once again. So it's going to be key whether today or tomorrow if this market is able to close above that 390 figure. The December contract gives us a similar formation, but unlike its counterpart, we can see that it's actually sitting right on top of its 1x1 red angle. Here we can see from this movement, potential resistance overhead does rest right where the previous highs did live, and we can see a point of control sitting at 415, which is going to be a very good resistance level for this contract upon its next test of this area, should it get to that number. Breaking above 415 tells us that this market has the possibility of reaching 420 in the not too distant future. And once it gets to about 420, we do have additional resistance up near that area about 419 that could give it some trouble. And so we want to watch in particular how it responds to this area upon reaching that level. That 419 mark happens to be the 180-degree mark, and we have support down below at 399. And so these two areas are going to be very important for this particular contract, especially in the way upon which it's been making higher highs and higher lows on its way up most recently. July beans has not enjoyed the strength that the corn contract has enjoyed itself, and it found particular difficulty coming in up against the 360-degree mark at 1079.5. Upon reaching this area, this market has been trading lower. We find a little bit of support coming in near that 1036 number, but the pattern that we're also seeing right now is akin to a downside continuation pattern. Over the next couple trading days, it's going to be very important to see the way in which this market's trading. Over the last 3 days, it's not made very much ground on this little pullback that it's had, and so on the next break, if it breaks below 1035 over the next 1 or 2 trading days, we would not be surprised to see a precipitous drop that makes its way down to test 1014.75, which would be that 180-degree mark for this contract. Upon reaching this area, we'd like to see the way in which it responds, as that would be a retest of most recent previous lows, but breaking below this number, especially if it gets below the point of control of 1010, that suggests for us that soybean could very well be in for some significant weakness. The July contract has been riding up against its 1x1 angle, similar to that of the May corn contract. And once again, once this support is no longer able to hold this contract up, we do think that the possibility of a nice move to the downside is on the horizon for soybean. Unlike its July counterpart that has made a lower high, the November contract has made a higher high coming into resistance near that 1052.25 number that we've been discussing over the last several weeks. This market continues to find great difficulty at that number, and the fact that it's not been able to break through tells us that the potential of reaching 1100 in the near term is perhaps off the table. In fact, we can see the small continuation downside pattern materializing, and a break of 1028 for this contract suggests a very nice move to the downside. Our time cycles now have found themselves at an expiration point, and now we're looking for the potential for a downward movement in soybeans, especially since it was not able to make it to our upside levels that we had been looking for before. Additionally, one more thing we wanted to bring to your attention is that as the market has made a higher high over the last couple of weeks, those new highs were made on decreased momentum. This is quintessential divergence, and when this happens, this is often a precursor that the market's momentum or strength has exhausted, and that downside movement is very well ahead for that particular contract. We want to monitor the way upon which this divergence does pan out for beans, but as it's looking right now, since we've met our time factor and the market was not able to close above that key number that we're looking for, we're now looking for a downward progression going forward. The most recent highs for November beans did touch upon volatility-based resistance overhead, and the next support level down below looks to be about 1017. Once again, we did see this market come in near that 360-degree mark where it did fail, and so this continuation pattern continues to be of great importance. Breaking below this number suggests that we have a sell opportunity underway, and the market should make a move about the same distance that it did going in on the other side, giving us a target somewhere in the neighborhood of perhaps $10. Wheat futures has been moving consistent with our projections. After having made a consolidation move in late March and early April, the market was able to make its way up. It came in and touched resistance just shy of 510, gave us a higher low just above that key 465 number that we discussed previously. And unfortunately today we're seeing a bit of a give back or profit taking after this market made a nice move up over the last 2 days. We would like to see this market close above 484.5 this week if it's to move higher, but as it stands right now, it continues to move in conjunction with our forecast projections and time cycles. That being the case, we continue to anticipate a price target of about 525 to 530 for this contract prior to coming off the board. In doing so, we look to see over the next couple of weeks if it's able to return to strength, especially if it's able to hold itself above this 45.5 number. Perhaps part of the reason for the downside movement that we're seeing today is that the market made its way up to test key resistance near 502, which is the 270-degree mark, which also happens to coincide with our point of control at 503 3/4. Again, we'd like to see support come in. Even better would be support at near the 480 mark, and upon doing so over the next couple of days, we do want to bring to your attention that our next important time factor coming in for wheat comes in near May 5th or at the beginning of next month. And so what we could look for here is if the market were to continue to move up into this timeline and give us one more higher low and then turn back up again, we could very well see a nice retest of that 525 to 530 mark that we discussed. And if the market's able to hold in this area here, we wouldn't be surprised to see the market even move a little bit higher based off of the cycle projections that we have. The US dollar has finally been able to break out of that key upside resistance after having been moving sideways for quite some time. Of key note that we want to bring to your attention is the way in which this market has done this. We've talked about that resistance that had been hitting very consistently for this market near the 90 to 90.5 number, and we found support below about 89. Interestingly enough, though, the tops have all been consistent across the top, but the lows have quietly been making subsequent higher lows. This gives us the idea then that the upside could very well be legitimate, and we could be looking at a continuation pattern sitting right in the middle of this movement to the upside, as we can see this triangle pattern breakout happening for the US dollar. Now, we do also notice that the volatility base bands have now made an official shift to the upside, suggesting that upside movement is possible. And over the next couple of days, if it's able to close above 92, that's going to be very key, suggesting that upside movement for the dollar could very well be in play. Taking a look at the weekly perspective, we also want to show you that the move this week is consistent with the entire length or the entire range that the market has had over the last several weeks. So this week alone, we can see that the range of this 1 week mirrors the range of several weeks back, telling us that something of significance could very well be in play. Mind you, this is only 1 week, so we do not want to be presumptuous in terms of what this market has ahead for itself, but it's important to see that the strength from this 1 week and the way in which it's broken out of the previous training range upon which it's been in, now that we've broken above that 91 number that we talked about, our suggestion had been that the side that it breaks first, whether it's the 88 number or the 91 number, would give us some follow through in that direction. Well, 91 has now broken. If we close above this area this week, we would anticipate then some continued follow through to the upside, with the next potential resistance number coming in near 93, which would be that prior inside low that happened several weeks back. Thank you so much for joining us for our market update. Look forward to touching base with you next time.